We're at MIPIM 2026, and we are joined by Mr. Michael Neal, who is Global CIO at Savills Investment Management, and Mr. Laurent Vouin, who is Head of France and Belux, also at Savills Investment Management. Michael Neal, Laurent Vouin, thank you for being with us on BITV.
Thank you, Luc, for hosting us.
Thank you very much.
To start the discussion, maybe we can talk a little bit about the market environment. Real estate seems to have regained investor appetite, at least according to the Outlook 2026 report published earlier this year by Savills IM. What are the current investment capacities at the European level and in France in particular for your group?
Yeah, I mean, I think when we look at the 2026 outlook, the one thing we did talk about was 2025 being really a year of reset, where valuations bottomed, where you saw performance across global indices starting to trend positive. Investors are looking for data points really to have that confidence that the outlook looks strong. The one area where we've been really focused on is on income and income resilience. So all of our strategies heavily focus on those aspects, and ultimately real estate is an income-based product with around 75% of its total return over the long term coming through from income. So we look towards resilient strategies. And as we look forward towards deployment, we're constructive on where the cycle currently stands with that valuation reset. We've got a lot of confidence in certain markets that we'll be able to deploy into those markets as a consequence of the depth of the platform that we have across key European markets. In total, we have around about £1.5 billion to invest across a whole series of strategies and markets. And with that kind of market backdrop, we're pretty excited about the opportunities that we see ahead in 2026.
Obviously, the conference has started unexpectedly last week or so with escalation of conflict in the Middle East. I wonder how much that's changed what you've come here to talk about and refined what you expect the key themes to be as well.
Yeah, look, I mean, obviously the situation in the Middle East is concerning, but I think where investors have got to from a pure economic and future outlook performance perspective is a world where geopolitics is playing a very significant role in investor thought, in investor thoughts. Our view is that ultimately we are of the view that risks have been elevated for some time. As an investor, you should always play an asymmetrical approach to risk and return. So wherever you sit within the overall risk spectrum, whether you're a core investor, core plus, value add, opportunistic, you should be expecting higher returns than what you were previously there, just to compensate ultimately for the geopolitical risk. And this plays out, and we've seen this play out last year in terms of tariffs. This is different in terms of quite clearly a war. But we believe with where the real estate cycle sits at the moment, the opportunity for strong returns is really strong. If anything, it plays more into, again, that sort of dive into resilience. And when we talk about resilience, we talk about sectors with fundamental supply constraints. Housing being a particular market, the residential markets more broadly in Europe, where the supply is, chronic to acute in terms of its shortage, really strongly playing into, from an investment perspective, the possibility of rental growth and strong income returns.
So in some ways, it strengthens where you're already looking at placing your capital.
It does. I mean, it changes things all the time. And of course, real estate's very heavily tied into ultimately the cost of finance. We don't know ultimately where swap rates and long-term rates will go, where inflation will drive. But at this moment in time, you're in a position on real estate core markets where you're seeing a positive spread with the total cost of debt in Europe over and above where prime yields are. So that's an incredibly good place to start from that perspective. But you're right, where you can ultimately home in and focus on those parts of the market which offer the most resilience, that's where we're trying to sort of deploy our capital right now.
And Laurent, you are head of France and Belux. You're the good person to ask. How do you see the French market at the moment in the environment laid out by Mr. Neal? And obviously, what are the main drivers of your strategy for France specifically in 2026?
Well, France is, of course, a very important country for most of our strategy that we're trying to deploy across Europe. And therefore, we try to be as active as we can on offices, on logistics, and CBD offices mostly, on logistics, on residential. We have a new JV with EDF Invest that was started at the end of last year. And we are working on some important mandates of us that we've been managing for quite a long time already. So we're trying to be active across the market. I think we're still in a moment where there's a sort of lack of product. Maybe the MIPIM, and it's just Tuesday afternoon right now, so I'm not sure what's waiting for me around across all the booths and all the people I'm going to meet there. But it seems to be quite quiet in terms of products to be produced, especially for us who are more focused on core products. It's a bit quiet. But we see a lot of refinancing happening on our portfolios and across the market, which will be, I guess, opportunities for us to find new products in the market also for our clients. And I believe the appetite of some seller for disposing could be a bit bigger in the course of this year. We don't see any trouble following the recent events at the moment. Obviously, we'll see how long these waves will hit the market and how bad it could be. Hopefully not too bad. But we come here with a lot of appetite for our main asset classes on the core products. And we wish to be very active in these few days and across the first months of the year.
Thank you.
Okay, and with the UK, looking at that as well, when you're looking across all these markets, the UK, are there opportunities specifically there different to others or not? Is it the story the same across the continent?
I think, I mean, all markets are slightly different, and being able to kind of select the right sub-market is super important in this world. But the broad themes that are playing through are no different really in the UK than they are in France or they are in Spain. It's all about the changes to demographics, urbanization. It's changes in a world that's deglobalizing. For all the points we've just discussed earlier, that's changing logistics supplies, and that ultimately impacts certain markets more than others. But in the UK, as I say, the same themes apply. We're heavily focused again, therefore, on residential. It's been many a decade where the kind of government's targets for house building have been complied with in the UK. It's the same across many markets in Europe. And when we look towards the UK, you see a fundamental kind of supply and demand imbalance. One of the areas we're really leaning into is into the affordable housing space, where we have a product and where we're active deploying capital into the affordable housing market, which is regulated, which ultimately provides investors with index-linked, inflation-linked cash flows, which in this environment, again, with a waiting list which is pretty significant, unfortunately, in the UK for social housing, you're pretty confident that your income streams, your cash flows are going to be resilient and they're going to continue to grow. So it's strategies like the affordable housing sector within the UK that we really like, or otherwise it comes back again to those parts of the market where we see fundamental imbalances between supply and demand, where construction starts have ultimately, provided that opportunity for landlords to be able to grow rents as a consequence of just lack of product. One of those is around London, in the City of London, in the West End, in the core markets. If you can ultimately buy high quality space or refurbished space or provide the debt on space where you see there's a brown to green strategy in one of the core markets, we're seeing very significant rental growth that's coming through in the London markets at the moment.
Okay. Michael, Neal, Laurent Vouin, Paul Norman, thank you all for being with us. Thank you also to everyone at home. We'll see you soon at MIPIM 2026. Bye.